Rob Sanderson of Loop Capital. Rob, it's good to see you again. On Meta first, Apple privacy, Forex, the Reels transition, that's where it's not only become less about beating your head with a hammer, but it's going to start to help.
Yeah, those are very material revenue growth headwinds that the company cycled through. You know, my estimate is something upward of 1,500 basis points. I mean, 600 of that is FX alone. Everybody's going to benefit from FX normalization, but the ATT transition and the transition to Reels have definitely had material revenue headwinds. Those will normalize this year and give them some relief. I think we saw the front end of what we're about to see for the rest of the year in the high end of their Q2 guidance up 11%. That was a big surprise on the first quarter earnings. And I think it's better than that. It's not just comp headwinds that normalize. They got a real product story here that I think is generating a lot of interest in two fronts, Advantage Plus and the Reels monetization ramp.
For those who say it took you long enough to come around, you're still comparing it to the beginning of 22 versus the S&P, right?
We're looking at forward 12-month EPS, consensus EPS, ex cash. And on that basis, it still trades at a modest, about a 5% discount to the market multiple. I think that's going to reverse, and it'll get a premium as revenue growth starts to reaccelerate here.
But don't you wish you had done this earlier? Doesn't it feel a little late for this call?
Yeah, we were surprised by the amount of cost cutting, and let's be clear and delineate the two. The revaluation that we've seen in the stock to date is on a 44% revision to EPS and a 3% revision to revenue. So this is the cost-cutting efforts that's really revalued the stock, and we didn't anticipate that. We were late on that. But looking forward, I think it's the revenue acceleration that still is the next leg here and is not reflected in expectations at this point.
As for Alphabet, I was fascinated by your line about social media companies who you think could make a real stand here in the AI space. Can you explain what you mean?
Yeah, I think, look, we're going to be seeing more AI assistants, launched by, I think, all kinds of apps, not just social media, but social media has the reach and the engagement. And I think that's, very interesting long-term opportunity for, providing services from all of the companies, whether it's Meta or TikTok or probably all of them. We've already seen a product launched by Snap, although smaller reach. I think we're going to see similar moves from all of the social media companies. And the question is on Google is less about the Microsoft search market share war. I think they're going to win that on product. They've got much more data. They've got much more reach. They've got a lot of AI competency. But the challenge, and I think the concern that's going to remain sort of unanswerable for probably years to come, is what happens when there's a behavior change and users are going through different avenues to find information where they used to use search technologies. That's going to be it's not an existential risk to Google, but it certainly introduces the potential for displacement in their core value proposition.
But is Google not an cost reduction story as well? I mean, if the street was so enamored with Meta's cuts, why not so much with Google, which we've seen efforts as well? Is it just not the same scale?
They're in the estimates. So we've seen, a couple of rounds, and the consensus has embedded that, and that's what we're basing our forward valuation is on, something that's already priced in or modeled in rather. Now there's probably opportunity for greater than the street's forecasting. We actually have higher than consensus EPS, but that's all embedded in our price target of $125.